Good morning and welcome to the KR1 PLC investor presentation. Throughout this recorded meeting, investors will be in listen-only mode. Questions can be submitted any time and just done through the Q&A tab situated on the right-hand corner of your screen. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to the team at KR1 PLC. Good morning.
Good morning. Thanks for having us. I'm George. Managing Director and co-founder of KR1. It's great to be here, and I'm looking forward to walking you through the next chapter of the company. Most of you will have read the announcement earlier in the week about our new financial infrastructure strategy, which complements our already existing strategy and operations. And today we're going to be explaining to you what we're doing, why we're doing it, and some of the how we're doing it. This is not a financial update, simply an investor update on the new strategy and our operations. We will likely be doing another presentation around the time of our full year 25 results. Just quickly a disclaimer. This presentation is for information and discussion purposes only and should not be considered an offer or solicitation to buy or sell KR1 shares. So KR1 sits firmly between traditional finance, public markets, and the new emerging digital asset space. We started KR1 in 2016 as a digital asset specialist and have had a successful decade with over 100 plus early stage investments. And we've grown from 2.86 million of funds raised to over 50 million in net assets, as shown in our latest December NAV update. We've been in Ethereum since day one, focused on key innovation in the space, and have been staking assets for over 6 years since 2019. KR1 secures, invests in, and generates income from these foundational networks, particularly Ethereum and its wider ecosystem, which together comprise over 55% of our holdings. Since 2016, KR1 has been the only London-listed company offering a diversified approach across digital assets and infrastructure via income from staking and venture exposure. KR1 provides access to this infrastructure layer, the protocols that will power the tokenization and the migration of assets on-chain. As we're now listed on the London stock market, this marks a new chapter, and given how far the market has matured, we believe the next golden age of crypto is in infrastructure growth, and we want to scale, expand, and diversify with it. So our mission is clear: to build the leading public market vehicle for exposure to blockchain infrastructure. This isn't about token speculation. This is about systems that are reshaping how assets across all asset classes are issued, owned, and traded on-chain. A little bit about myself. I started down the Bitcoin rabbit hole in 2011. I remember when Litecoin was invented, and I thought to myself, "Oh dear, this is competition for Bitcoin." But fast forward a few years, and that had completely flipped 180, and I realized that there was a huge amount that could be done with digital scarcity. And as Ethereum formed, I became very much involved in the London Ethereum community, and KR1 was sort of born to explore that emergent ecosystem, whilst at the same time giving people access to that new economy via a publicly listed share, and it's been an incredible journey thus far. I'll hand you over to Kel to discuss the rest of the team.
Thanks, George. I'm Keld, also Managing Director and co-founder of KR1. And if you haven't met me before, I was early in the internet and started and sold one of the first web development companies to Leo Burnett in 2000 in those heydays back then. And then I've also started a couple of other companies since then. One of them was a mobile payment service for SMEs, which is still running today. And I discovered Bitcoin early around 2012, 2013, and Ethereum pre-ICO. And then around that time, I met George, and then we decided to start KR1. Our third member of the management team is Janos. He was also early in the Ethereum scene. and is an economics graduate. And I think the important takeaway from this slide for everyone to acknowledge is that we're fully aligned as a management team. We own about 25% of the company. We earned those through performance bonuses in 2020-21 when the share price was around £1.20. So there's no one really more motivated than us to get the share price north of that. And so that's a really big takeaway from this slide. The rest of the company, we've got Rhys Davis, who's a chairman, who's very experienced for 25 years in the public markets. And we've got Peter Holsgrove, who's also just joined. He's very crypto native. He's been in crypto for 10 years and a very safe pair of hands on our IR and communications. So as a sort of outlook, our outcomes are directly tied to the long-term shareholder value.
So quick financial snapshot. So as at the end of December, our NAV sat at 50.2 million or 28.25p per share. And throughout 2025, we generated over 4.9 million in income from our technology infrastructure operations, which is essentially all from our staking activities. Please keep in mind that these are unaudited figures based on our financial update announcements throughout the year, and may differ from our eventual audited results, which you can expect to be published by the end of April. And also, just to reiterate, we don't have any borrowings as a company and have a strong balance sheet. So onto our business model. So for the past 7 years, we've been an active operator in proof of stake networks, ensuring the integrity and security of these networks. So a good example is Ethereum. So the first thing we do is we take the Ethereum that we hold and we use them to stake. With staking, the Ethereum is locked up in the Ethereum staking system and used to activate a validator, which is basically a trusted network participant. The validator's job is to check and confirm transactions and help create new blocks. Think of it as keeping the shared ledger honest and up to date. For doing this work, the validator earns rewards in Ether. And these rewards come from, providing network security and reliability. But the important part is compounding. So instead of taking the rewards out, we restake the earned Ether. And over time, this means we're earning rewards on the original Ether plus the rewards themselves. So Ether making more Ether. The result is a steady compounding growth. And as long as the Ether stays staked and the network keeps running, our strategy continues. And so this is what we're doing. This process of making an asset work for us within its technology stack is repeatable across different networks and different protocols. And we've been doing this process for over 7 years, and we're going to repeat this process across new assets and protocols. We seed funded Celestia and Redstone, and we can put them to work too, gaining income from utilizing these positions in technology operations while also being exposed to capital growth of these holdings for when market sentiment returns. Redstone provide Oracle data feeds. It's an exciting new project. Redstone data is used to power BlackRock's Biddle fund. And of course, they recently signed a partnership with Canton, which has a huge addressable market. And this is not everything. So we can apply technology infrastructure operations across varied networks and protocols, and we will seek to identify new opportunities continuously. And now to our financial infrastructure strategy, which we put an RNS out earlier in the week. This strategy is all about going down the risk curve with our assets, hunting high yields, yet with a deliberate, thought-through, risk-managed approach. We're looking to utilize up to 20% of the company's holdings towards this financial infrastructure strategy. And as part of this, we've started buying Bitcoin, and we've added to our Ethereum position as well. We now view both of these assets as productive financial assets, and we're targeting diversified, risk-managed yield generation alongside our core technology infrastructure strategy. And why Bitcoin now? Well, the DeFi landscape has matured sufficiently to allow us to manage a Bitcoin position effectively. And it won't only be Bitcoin. We will also put to work a portion of our Ethereum and also get our Nexus Mutual position working harder for us, both in terms of generating income on our holding by putting it to work within the Nexus underwriting cover system itself, but also, and this is key, getting our assets covered within the DeFi ecosystem using the Nexus protocol itself. So this is a higher yield strategy. We need to beat the standard Ethereum staking rewards, which are currently around 2.6%, as well as beat alternative market participants that are currently getting very low Bitcoin yields. We think we can outcompete these comfortably in terms of yield. And to be clear, this financial infrastructure strategy is complementing our already operating technology infrastructure strategy, and this is how we plan to allocate our holdings in terms of utilization across these strategies. And this is how it will work. So we add our assets to a liquidity pool deep in the DeFi stack, while at the same time taking out very specific cover within Nexus Mutual that covers our position should certain events occur. This approach allows us to retain control of our assets, seek high yield, yet remain shielded to a great extent from the risks inherent in the space. And why are we doing this now? Well, DeFi has got proven product market fit. There's huge growth in the space, and a tsunami of stablecoins is coming down the pipe. As you know, the American administration is currently putting stablecoins at the very heart of their financial planning, which is fairly extraordinary for those who've been in the space a long time to imagine, but it's happening. And as that growth of stablecoins happens, so will DeFi grow, and we want to position ourselves for when that happens. So we will seek outsized yield opportunities while we await the capital growth of our DeFi-based assets. We're an established, specialized digital asset operator, and we're seeking to take full advantage of our DeFi knowledge we've gained over the past decade. Not to forget, of course, our venture arm, which is where the whole company began and how we cut our teeth as a young technology investment startup. And so venture, will continue very much to be a major focus for us. We've done over 100 investments to date. Some of those have gone over 1,000 times our money. Since inception, we've had a very strong focus on Ethereum, but we'll always look to the ecosystem as a whole, as game-changing technology can come from all areas of the space, as we know. We consider ourselves to be the best positioned LSE company to capture innovation in the digital assets and financial innovation that's coming down the pipe. As a great example, we were the company that seeded the entire Ethereum staking landscape with our Lido and Rocket Pool. And we will continue to pursue strategic investments across innovative decentralized networks, building a diversification while also maintaining exposure to the highest quality infrastructure. This approach positions the company to benefit from long-term growth and the evolution of the digital asset space, while remaining obviously as disciplined, adaptive, and aligned where we can with durable value as it's created. To achieve that, we will continue to actively manage our holdings across the technology, financial infrastructure, and venture to optimize for capital long-term growth. And now I'll pass over to Kel to discuss our strategy.
Thank you, George. Our strategy has really been to create a flywheel from research to the asset allocation to capital growth and then producing income. And we've been doing this really from 2016, focused on decentralized technology, that's blockchain, that's digital assets. And as George mentioned, we were early in Ethereum, and now we've seen that's the clear winner in decentralized finance, which has found product market fit. And that includes this massive explosion in stablecoins that we're seeing. But as this space evolves, so do we. We're in an evolution now. Initially, we began as an early stage VC, but we've seen a complete change in the space. As we're in in a contracting market, consolidation into quality is also essential. But what looks really compelling to us now is the ability to extract the superior yields from high quality productive assets and make those assets work. We've been really successful with technology infrastructure at scale through our staking activities since 2019. And now with the changing market dynamics, we're bringing new financial infrastructure operations into live. This is a powerful combination of income streams. And we feel this approach is really missing from digital asset public companies right now. And lastly, long-term capital appreciation remains the primary objective for KR1, but we complement this with income streams from technology and financial infrastructure. These are going to diversify returns for us, reduce the dependence on pure price appreciation, and also introduce more consistent cash flows without compromising our core growth mandate. We're still investing, obviously, but now the goal is simple: to fill the diversity gap and outperform the market using active asset allocation at scale. So how does KR1 fit in this landscape? Well, the majority of public digital asset companies like ETNs or digital asset technology companies, which are DATs, called DATs, are built for price replication. They're not really ecosystem participants, whereas we generate returns by operating within the networks themselves. So this is the important takeaway I'd like you to take from this slide. The primary strategies we run, we're a specialist digital asset technology business. We run nodes, we stake, we invest early, we build positions actually inside the network architecture itself. And traditional vehicles simply mirror a token, and treasury style firms stack Bitcoin or Ether and then just wait. We generate exposure from within the system, and that's a different return engine. As far as diversification goes, there are different models. They're not just different tokens. So it's not just 5 tokens, it's 5 economic models. And we span layer 1s, decentralized applications, staking, DeFi, and infrastructure. Whereas most ETNs and DATs are single asset, single narrative, and single risk. And if that asset stalls, they stall. So we don't depend on one storyline to survive the cycle. On income generation, for passive funds, income is limited or actually absent. For treasury models, yield often conflicts with preservation. But for us, yield is actually the core. Staking rewards, network participation, and protocol economics are actually key to KR1. And we monetize participation. And in sideways markets, that really matters. And in volatile markets, it compounds. This is the paid work inside the system that we do. Just a little note on the yield on these treasury models. Some DATs issue new shares to buy more Bitcoin. Yes, Bitcoin on the balance sheet rises, but if the amount of shares rises too, if issued above NAV, the Bitcoin price per share improves. That's capital structure, not really yield. So Bitcoin isn't actually generating income in this case. It's just new capital buying more Bitcoin, which is useful in that vehicle, but it's not actual income. So just wanted to clarify that. Some strategies amplify returns with balance sheet leverage. That works until it doesn't. But we don't rely on borrowed capital to manufacture upside. Returns come from positioning and not financial engineering. And that, for us, that's just real resilience with our model. We've got a track record, and we've been doing this for 10 years. We're research driven and really experienced in the space. ETNs and DATs are much more static, less experienced that we've seen so far in the team structures, and are very passive. And on the return drivers, we're the only listed digital asset company combining high conviction, active allocation, and continuous portfolio management across core emerging protocols. You know, we research, and we've been researching for 10 years, and we're still hunting for the new Ethereums. We're not just sitting passively on legacy holdings. And our return stack is the asset appreciation, income yield from the networks in the technology infrastructure and financial infrastructure operations, and actually active allocation. So this is structural growth participation, where price is one driver, it's not the only driver. We don't require a single line bull market to perform. ETNs and DATs do. And as such, we're positioning KR1 for more than one environment. So what's next for KR1? We're going to utilize up to 20% of the company's holding in financial infrastructure, as we announced earlier this week, and as how George explained. This will help reduce reliance on technology infrastructure income and staking and pure price appreciation, and provide additional cash flows. In technology infrastructure, we're launching our own validator on Ethereum, which we're really excited about, and other networks to directly support network security. Also, our Oracle data provision operation will come online soon with Redstone, which will happen in the spring. We also seed funded, and it's a very exciting project and one to watch. We're also activating our previously idle Nexus Mutual holding, as George mentioned, as part of our financial operations. Coverage underwriting is actually live, and we're generating income with that as we speak, with additional assets being deployed as capacity scales. So what we're really doing is active asset allocation, and we're going to employ more disciplined harvesting of income streams, including staking rewards and more active rebalancing of holdings to improve our risk-adjusted returns. On the venture side, we've got venture and infrastructure investments we're looking at. We'll continue to invest in high-quality technology and financial infrastructure across DeFi, with a clear bias towards assets that can be productively utilized to generate yield. So in summary, if we take a look at the wider digital asset landscape, probably most people on this call will understand the landscape we're in. They're doing their own research, and they've got a lot more understanding. When we used to previously talk to audience, they didn't really understand the actual landscape. Well, in this kind of macro setup, you all know that the cycle is very different from previous. But alongside this, we've got incredible things happening on the tokenized real world asset situation. If you zoom out for a second, this is not just about the next pump, it's about actual infrastructure maturing. We're seeing new record stablecoin growth and tokenization, which is just starting to move. BlackRock seems to be announcing stuff every week about tokenization. And these are going into live projects, not pilot projects. They're actually becoming operational infrastructure, treasuries, credits, and funds, settling on chain because it's obviously faster, programmable, and cheaper. And that kind of technology movement always wins. We're seeing with Ethereum stablecoins are no longer crypto native tools. They're actual settlement rails. Banks, funds, and corporates are using them now. And when institutions use rails, they don't switch casually. So they're in it for the long term. On the regulatory side, we've been waiting for regulatory clarity for absolutely years, and it's actually happening. And then what that means is now this clarity is happening. Large pools of capital, which were structurally sidelined, these reg changes actually means we're seeing a lot of actual real change in the US. We actually spent a lot of time last year lobbying, working with ministers, and obviously working with the FCA, being the first crypto company onto the LSE apart from Binance, which is a Bitcoin miner. So we're actually in the room having these conversations, and this is all much more promising. What these regulations are going to do is unlock this sort of long duration capital, which is slower, larger, but much stickier money into our asset class. We're really excited about this new merger of crypto and AI. We saw a first wave of it. Some of our portfolio companies pivoted into it, some unsuccessfully. But this new wave, the second cohort, is really going to hit the ground running. And we know that AI needs crypto. It needs the compute data markets. It needs the verification layer, and it needs the micro payment rails. And crypto provides all of that. We feel it's a perfect match. And we also feel that Ethereum is well placed to capture this value too. And if anyone saw the Ethereum Foundation release on their new AI agentic unit, that they'll understand that they're fully committed to enable developers to create new AI systems with Ethereum. This is very exciting for the Ethereum ecosystem. And we've felt this is another reason to double down on Ethereum. So where the market's looking, you've probably done all your own research on it, but by late 2026, you'll have institutions in place, the regulatory unlock, infrastructure live, structured products active. And this will, the liquidity will expand, and this expansion will drive the repricing of valuations. More bullish towards 2027, which won't be around price, but it'll still be around this capital rotation into infrastructure, institutional positioning and structural adoption will accelerate. And this potentially will create new cycle highs driven by usage, not just sentiment. And that's a really different quality of market. So on the summary and outlook, we've had a successful 10 years, but we've learned a lot of lessons. One of the analogies I like to use is it's like a football analogy. We ran a football team. We won Division 3 for quite a few of those 10 years, but we also learned a lot of hard lessons. Now we're in the Premier League. We need a new strategy. We want to win in this league. We were looking at some of our strikers and some of our assets. And we're basically in this evolution. So the focus now is scaling repeatable technology and financial operations alongside investing to generate returns from real network usage on the highest quality assets, not leverage or manufactured yield. So for us, it's infrastructure maturing into capital markets. And when that infrastructure matures, value will accrue to those operators. So we're really set up for this long-term exposure to this new exploding asset class. We're not chasing the cycles. We're compounding alongside innovation. We're really here to capitalize on clear inefficiencies in public markets when it comes to accessing high quality investment opportunities and digital asset income, particularly with next generation Ethereum and Bitcoin yield. We're not trying to time volatility. We're not positioning for the quarter. We're actually aligning with the direction of infrastructure evolution, and we're letting adoption do the heavy lifting for us. We're positioning for a structural shift that's already in play. So kind of bringing this all together, we know that KR1 is the best positioned LSE listed digital asset company with the most experienced team in digital assets and the public markets across staking, venture and on-chain infrastructure. And we're building this leading public market vehicle for exposure to this blockchain infrastructure. It's not just token speculation. It's actually the systems reshaping how these assets are across all asset classes, how they're issued, owned and traded on chain. And it's sort of like a final we want to leave you with this. Our mission is to be the #1 blue chip digital asset company on the LSE. So I'd like to thank you for listening and taking your time. We're going to move on to questions, but just to add now, if we don't answer your question in this Investor Meets company, it's the first of many. We'll obviously be listening to all your questions and concerns and answers in
Fantastic. Thank you both indeed for your presentation. As the team said, ladies and gentlemen, please do continue to submit your questions just using the Q&A tab just on the right-hand corner of the screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you recording the presentation along with a copy of the slides and the published Q&A can be accessed via your investor dashboard. Okay, I'm just going to pop your camera on if you don't mind. Let me do that. Lovely, thank you. As you can see, guys, we've had a number of questions throughout today's presentation and also several pre-submitted. Probably one to start with, let's look at this as a bit more of a macro question. She says, why should I invest in KR1?
I'll take that question. I think, hopefully throughout the presentation, you've understood some of the kind of core principles and reasons about KR1. So I think some of these that really are relevant to this question are we are very highly experienced as a team with a long successful track record. Over the 10 years, we've navigated a lot of the dramas, sidestepped those, and also invested successfully. Obviously, we've learned some lessons, but compared to anyone else on the LSE, we're streets ahead in experience. We're also really aligned, hopefully that came across. We've got a meaningful ownership as a management team in the company. So we want to get that share price up as much as you do. Looking at the competitors, ETNs and DATs, hopefully you've understood that they operate in a different way. We're much more active. We generate really economic activity within these systems. We've got a different return engine. We believe we've also got a great handle on the type of assets within DeFi that we're going to be exploring, and other teams just don't have that. And sort of as a last, why invest in KR1? I think if you want to be sort of direct, if you look at the market where it is and where we're at, there's a price entry opportunity in the market cycle. If you're DCAing, it looks a great time. So I hope those answer some of So I hope that answered that question.
Okay, thank you very much indeed. A couple of questions here. Matthew, thank you for your question. Around the kind of same theme. You mentioned you've started buying Bitcoin and Ethereum. Can you elaborate on this a little more, please?
Sure, I'll take that one. I think the main thing here is that the time feels right to do it. We now have the infrastructure and the expertise in place to manage a Bitcoin allocation effectively, while also generating enhanced yield. So I think core to this was our understanding of how we could use our Nexus Mutual position to sort of go down the risk curve with a Bitcoin holding, but and seek higher yields, but at the same time protect ourselves to a degree using Nexus. And in the preceding years, if you wanted to get a yield from your Bitcoin, you had to hand it out. You had to hand it to a third party and get some counterparty risk in there. And clearly that caused huge issues in 2022. Not naming any names, but I think it's never been part of our sort of core ethos in terms of holding onto our assets, keeping custody of them, and making them work. And it's only really now that all the pieces have come together to allow us to do it. And then, of course, the last bit, we've been planning this a while. We hadn't fully considered that the market would fall to this level, so we see this as an attractive entry point, and we'll be DCAing as best as we can. It's a compelling setup, shall we say.
That's great. Thanks indeed, George. I guess you've covered a lot of this in the presentation, but what can we expect from KR1 in 2026?
Well, yeah, we've, what we're announcing with this new infrastructure strategies is really, the word is evolution. It's not a revolution, it's just an evolution. We've been, hard at it for 10 years, but, we see this opportunity for us in 2026 from a model primarily centered around staking and early stage token investments towards a more broader, more diversified strategy that integrates core blockchain assets into an active income generating financial and technology infrastructure operation. And that's really the sort of the complementary operation that we're going to be we're kind of running, putting up to 20% of the company's assets into focusing on that. So yeah, rather than holding on the balance sheet, we're going to be using them, sweating them, working them, risk manage with Nexus. But we feel we're 2 steps, 3 steps ahead of the pack on this, and we feel that's like the next great opportunity for KR1.
Fantastic, thank you. Next question we've got here: how are you funding the Bitcoin investment? Is there any share price dilution?
So, as Kel said, we're looking to utilize up to 20% of our holdings in this new financial infrastructure strategy. The relevant acquisitions are being funded from existing income streams, but also adjustments to some of our what you might call underperforming holdings that the company has. It's all obviously under review all the time in terms of what the board is thinking and certain market conditions. And while we do have authorization from shareholders in place in connection with the placing program, which is detailed in the prospectus, there's no immediate plans to fund the initiation of our financial infrastructure strategy through share issuances. So no price dilution.
Fantastic, thanks, George. Touched on AI slightly. What do you think about AI-related crypto investments?
Well, I mean, there are the next golden age of crypto is partly with this AI layer on top of it. What we saw earlier on, and some of our portfolio companies did the pivot, is that it makes sense in some products and services, but not in others. You can't put lipstick on a pig, right? But we know blockchains are automatic, autonomous, verified software with micropayments on top of them, and AI needs that. It needs to operate with that to get to scale. AI needs digital assets, blockchains, and crypto. especially these agentic AI models, which also use crypto with micropayments. So it's the holy grail for this new global infrastructure at scale. And at K1, obviously, we're super excited about it. We are looking at projects, obviously, and we doubled down on Ethereum because, as I mentioned earlier, they are fully aligned with this vision, and they've developed this new unit within Ethereum to help promote this agentic protocol upgrade. There's actually a protocol upgrade going to happen on Ethereum for people who want to develop new AI systems on top of it. So yeah, we're very excited about it.
Fantastic, thanks, Kel. What steps is the company taking to close the NAV share price gap?
Well, like everything, it's a matter of demand, supply, market dynamics, and isn't directly in our control. But having said that, we're positioning KR1 to be the institutional blue chip digital asset specialist on the London stock market, where we will bridge public markets and digital assets as we have done since 2016. And so we will be working with our broker Singer Capital Markets, and we will obviously address closing the gap. And I think also through our performance, through the financial infrastructure strategy that we're embarking on, the company will be less resilient on the performance of our staking and technology infrastructure operations as a whole, and we'll have this new element to bring to the equation. And we will keep allocations under review by the board, obviously in line with market conditions, trying to seek the highest potential for resilient income and long-term capital growth and value creation. And then lastly, I'd say that while we've built our in-house IR function now since the London Stock Exchange listing, and we can all look forward to a higher cadence in terms of comms and news flow, and we will try to get our story out more broadly. Looking forward to doing that.
Fantastic. A couple of questions here against launch of validators. Charles, thanks indeed for that question as well. How do you expect the launch of planned validator nodes for Ethereum, 138 nodes, and Polkadot 3 nodes to impact this recurring cash flow in the first half of 26?
This is, are we going to make more money question? And the answer is over time, yes, because it's more complex running your own validators. We're going to be deeply in the system. So initially, no major changes to the underlying financials, but we're going to be improving those over time. We're playing the same role as before, but we've got a much higher control and ownership of these operations. And that's playing a more active role in the network with governance, as an example. And this will get us the additional benefit and upside of gaining access to compelling venture opportunities, because we're in sort of further in the system. So yeah, we've hopefully that answers the question. It's over time, and it's going to allow us more opportunity by running our own validators.
Fantastic, thanks, Kel. Arthur, thank you for your question here. Just a real extension of that Polkadot. KR1 had major positions in Polkadot and Polkadot ecosystem tokens. What happened to these positions, and what are your latest thoughts on Polkadot? Has it failed versus major change like Ethereum and Solana?
I can step in for that. I think we've all been we love Polkadot initially, and over the time, we still believe it's got. They're releasing the Jam protocol this year, but it has underperformed. So it's on one of the assets that is we're using in the 20% to reallocate. But we've done incredibly well out of Polkadot, and we're looking to the future on it. But it's underperformed. You can't deny that. You just look at the numbers. So, it's a poor performing football player in the football team, and as you can imagine, it's on the subs bench being shouted at by the manager, and maybe some of it's on the transfer market. So, hopefully that answers your question.
Thank you very much indeed. We've had a couple of questions around your communication strategy. Just pick one piece out here. Will be changing your communications approach going forward? Why have you announced the strategy?
Well, the truth is, under the FCA scrutiny that we were under in most of 2025, we effectively had our hands tied. We were, as I say, under extreme scrutiny during that uplisting time, and it wasn't a particularly welcoming environment. No one had ever listed on the stock exchange in our particular asset class in terms of a diversified portfolio, and we effectively couldn't really communicate much, and we couldn't really change the sort of core elements of the company as such. And the process took a long time. It was a huge baptism of fire for the team to go through this process, but hugely excited that we managed to do it. So now we're through, and like I say, we're now really beginning to concentrate fully on our IR and comms. Like I say, expect a much higher output of PR into 2026.
That's great. Thanks very much indeed, George. Next question, Steve. Thank you. Can you explain how we can get a regular yield from any Bitcoin stakes?
I think we've covered that off, right? We're going to be providing Bitcoin as liquidity, and we're going to, risk mitigate that with Nexus Mutual. So that's basically, we don't want to go too far into it right now. If anyone's very interested in it, they can always contact us privately. We can run through what we're going to do. But yeah, in generalistic terms, we're going to use Bitcoin to work in an environment that's got risk mitigation and coverage on it. So that will, create a sort of more positive environment for it to kind of sweat and work.
Yeah. Fantastic, thanks indeed, Rim, thank you. What are your thoughts on Zcash and privacy coins? Is this an area we're exploring?
Well, I think it's had a long time in the market. Privacy is obviously a key concern. Has it had its day in the sun? There is this element that Zcash always seems to pump just before Bitcoin goes into the depths of a bear, which seemed to happen exactly this time around as well. So maybe it's a way of looking for when the bear's going to come. It's not been on a core part of our view of the ecosystem to date. Privacy has been far more interesting to us in the Ethereum ecosystem, and what elements are required there from a smart contract perspective, and obviously zero knowledge proofs, and there's been a lot of privacy innovation that's come out of the wider ecosystem. But never say never, and obviously we understand privacy is a key element coming up. So yeah, you never know.
I'd just like to add one point. Actually, the ZK point is crucial, because without that on Ethereum, then companies and enterprises won't use the public blockchain to kind of run transactions, run payroll, run all sorts of contracts on it. It really needs that ZK sort of shielding element to it. And once that's in, then that blows the way for more enterprises to come and join Ethereum and put their operations on chain.
Fantastic, thanks, Carl. Pradeep, thank you. What's the reason for less/no venture investments in the past year? Is that the quality of ventures are low, or venture investment is not announced yet?
I can grab that one. I think what we saw is the landscape changed. We had there was no real there was a reality gap between private valuations and the secondary markets last year, and the disconnect was quite big. So really overinflated seed round and follow-on round valuations in comparison to the secondary market. with a lot of clone type projects, and alongside that sort of very aggressive American VC money taking the whole round, type approach. So we didn't, we kind of sat on the sidelines a bit, and investing also has hit that kind of model. If you know KR1 well, we did, we turned 75k into 130 million with Celestia. We got, quite a few million out through staking rewards, but because of the vesting locks, we couldn't get that value out, and we were extremely frustrated about that situation. So the vesting model has, which is like a traditional VC model, has kind of dampened that initial flush where you get all the tokens unlocked, and the price would settle and find itself, which actually feels like a fairer model. So basically, if you combine all those elements into the sort of investing landscape, then sometimes it's good just to sit on the sidelines because the deals just aren't that interesting. I think famously Fred Wilson from Union Square Ventures didn't do a single investment in 2009. He just didn't like what he saw. And I think you've got to be, as an investor, you can make one good decision a year. We started off at a rapid rate, but I think where we are with the market, I think you've just got to adapt and adapt your strategy to what's actually going on around you.
Cool. George, thank you very much indeed. I think we've covered off the main themes of the questions we've had through, and of course the company can respond to all questions submitted today, and we'll publish responses where appropriate to do so on the platform. I'd like to say thank you for all the attendees today. Could I please ask investors not to close this session? You'll be automatically redirected to provide your feedback in order the management team can better understand your views and expectations. It'll only take a few moments to complete, and it's greatly valued by the company. On behalf of the management team of KR1 PLC, we'd like to thank you for attending today's presentation. That concludes today's session, and good morning to you all.